All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. Even after the main news, there's some real juicy drama ahead. But the first thing that I want to talk about is the potential 51% attack on Ethereum that is planned for April 1st. Now, it's not quite a 51% attack as people have been making the headlines to be. And this isn't exactly mainstream news. This is sort of an underground movement going on, and it's against EIP-1559, the Ethereum improvement protocol that is upcoming in mid-summer, something like July. So we have the Berlin hard fork coming up soon. That's not such a big deal. But in the London hard fork, we have EIP-1559, and miners are not happy about it at all. So what does EIP-1559 do exactly? So first of all, EIP-1559 is an algorithmic gas estimation, the market rate for gas. And you'll see why this affects miners in just a moment here. This is actually good for hodlers and investors, and it's bad for miners. So using a system that is comparable to Bitcoin's difficulty adjustment, EIP-1559 increases or decreases base fee based on the current levels of congestion on Ethereum. So basically the Ethereum fees are absolutely out of control right now. A lot of people can't even use DeFi because the fees would just eat your profits to pieces unless you're trading something like thousands of dollars on DeFi. If you just have a few $100 and you try to go buy a token on DeFi, forget about it because it's just too costly. Now that's DeFi, and just to send Ethereum across the network back and forth, it's not so bad, but it can grow exponentially if the congestion on Ethereum is high and it's lower, obviously, if it's lower. So basically, EIP-1559 doesn't lower gas fees. What it does is sort of just automatically makes them increase or decrease. So basically, if Ethereum is greater than 50% utilized, base fee automatically increases. If it's less than 50% utilized, base fee decreases. So it tries to make a fee based on the congestion. Instead of having these wild fluctuations, you could think of the fees right now on a chart as a big U. So if there's high congestion, the fees are absolutely out of control. Sometimes people are paying $100 or a few $100s for a DeFi transaction when there's high congestion on the network. And sometimes it goes really low if there's low congestion. So basically EIP-1559 will regulate them to a certain level so that they're not just flying all over the place. It's more like Bitcoin's difficulty adjustment, where Bitcoin every 2 weeks will adjust its difficulty based on the hash rate. And that's what this is going to do. So it's not necessarily going to lower fees for the Ethereum community, for just users in general. What it is going to prevent the incredible explosions in the price of Ethereum fees, in gas fees. So base fee attempts to generate the market rate for gas prices natively on Ethereum. Well, we can see the typical rates that are being paid on websites like Gas Station Info and Etherscan's gas price tracker. These are third-party gas market estimations. Additionally, they also don't illustrate the level of overpayment for gas fees. So sometimes people pay much higher for gas fees. Sometimes there might be some kind of ICO or some kind of thing where everybody has to buy in at once. And if you use a low gas fee, you're not going to make it. But if you use an exceptionally high few $100 gas fee, which some people do on DeFi platforms and stuff, you're definitely going to get in because the miners are going to prefer to take that payment and push it through first. So this would just regulate it to a specific level based on the congestion. So which is good for investors, but you'll see why it's bad for miners here pretty soon. So we get the idea of it. So basically they want to do one of two things. In this article, it doesn't really say the other option that they have considered. The other option that they've considered, one option is basically the fees will no longer go to miners. They will go to basically a pool, and then every block, 1/10,000th or something like that, will go to the block finder, if you will, as sort of the Coinbase reward, right? And we'll add it to that. So that's one thing. Another thing is the big one is burning base fees. So base fee is burnt. No one receives a base fee. So burning this is important because it prevents miners from manipulating the fee in order to extract more fees from users. It also ensures that ETH can ever be used to pay for transactions on, that only ETH can ever be used to pay for transactions on Ethereum, cementing the economic value of ETH within the platform. So burning base fee removes the ability for validators to manipulate the fee market for their benefit. It also locks in Ether as the native currency of Ethereum, as it should be. No other currency on Ethereum can be used to pay for transaction. This is comparable to a nation state demanding that only their native currency be legal tender. So paying fees to Ethereum. So burning ETH in transaction fees is a simple way to pay for Ethereum for its block space. So basically, all of the fees would get burned, and Ethereum, during very high congestion periods and very high fee periods, and since there's no base fee, just that fee, that base fee that would be going to the miners would just be burnt. So during high transaction periods and congestion periods, Ethereum would be deflationary, whereas during low congestion periods, it would just be kind of meh, somewhat deflationary. So it'd be very deflationary or just a little bit. And it would likely still be inflationary when congestion is low because the base fee wouldn't be too high to burn. So let me give you an example here. This is just a few of the blocks. And I have some here. So I just gave like a few examples here. And one, this is the block reward for a recent one. Now it says 4 minutes ago, but I picked these out a little while ago in the day, and they're just sort of arbitrarily picked recent ones. So this could actually be higher on certain days or lower on certain days. But this just goes to show how much Ethereum miners are making currently. And so we see it's 4.37 block reward. But the Ethereum block reward is only 2, right? So somehow more than double the block reward to miners is going out. How can that be? It's because the fees are so high that all of those fees during that block period are going to the miners. Bitcoin works like this as well. So every 10 minutes with Bitcoin, all the transactions that go in it and all the Satoshis that you pay in that transaction to pay for yours, maybe it be 50 cents, maybe it's a few dollars, maybe it's as high as $10 on a high day or something like that. That goes into the block. And then when somebody gets the Coinbase reward, they get the Coinbase reward of 6.25 Bitcoin plus the fees, which is usually like 0.3 Bitcoin or something like that. Could be less, could be more, right? So it's a significant amount of extra money to the miners. But we see here that the Ethereum block reward is 2. It used to be 3, and Ethereum underwent a thirdening instead of a halvening like Bitcoin does. So it used to be 3, now it's 2. But you could see here that 2.3799 and some big long number after that is transaction fees. So literally the transaction fees are worth more than the block right now. So miners are not very happy with EIP-1559 because this right here would get burnt. So 2.3 ETH would get burnt, which is literally higher than the block reward. So therefore, Ethereum would actually be deflationary because literally more Ethereum would be burned than the actual block reward. Thus, that would be very good for investors and long-term hodlers because significant amounts of Ethereum would be lost forever by being burned. Here we can see one pool, Flexpool, announces its position against EIP-1559. Also, a lot of people are talking about moving their hash rate, and we'll get to that in just a second. So stop ETH speculators, start respecting miners, don't let EIP-1559 go live. So basically the only people that want to stop this are big Ethereum miners because they're making so much money right now. But the idea is that proof of work is going away in Ethereum. It eventually is going to get completely phased out, and you will no longer be able to mine Ethereum regardless of EIP-1559 going out or not, because proof of stake is coming, and therefore you'll end up having to switch your algorithm to something else eventually anyway. Period. Regardless of EIP-1559 or not, proof of stake is coming. So EIP-1559 is a proposed initial design to reduce Ethereum's transaction fees. Later, it shifted to proposing that transaction fees be destroyed instead of paid to miners. So the Ethereum Improvement Protocol was initially designed to reduce Ethereum's high transaction fees, but at the end of the day, they ended up just burning all transaction fees instead of giving them to honest miners. So you can see how biased this is, that only the miners, which honestly are a small portion, an important portion of Ethereum, but there's more users of Ethereum than there actually is miners. And I argue that EIP 1559 is better for the long term of Ethereum and the regular investor who's going to pay slightly less fees. Now, it's a little bit misleading to say that EIP 1559 is going to reduce fees. It is, and it isn't. There will still be high fees during congestion period, but basically Ethereum at that point, the EIP will set a static amount of fees. It's going to be this much fee because there's this much congestion. It's not going to raise congestion and then all of a sudden the fee goes through the roof. The fee would have to go up every day or however long in between that this takes. In the same way that Bitcoin every couple weeks will go up or down in difficulty depending on the hash rate, this, depending on the usage, will go up and down. I don't know how many days it will take for it to go up and down. I don't know if it's a week, if it's 2 weeks, but either way, it's going to be this periodic adjustment based on it. So instead, you'll have a more reliable fee. You will know how much you're going to pay and not just, oh, there's some crazy ICO going or there's some crazy new DeFi thing. I'm going to go buy it, but everybody else is doing it at the same time, so it's going to cost you $200. No more of that. You're going to know how much it costs. So in some ways, yes, it's going to reduce fees only because there isn't going to be this explosion in fees just all of a sudden randomly. But it's not going to necessarily lower fees either. So it's a little bit complicated in that sense. Ethereum developers are highly anticipated to launch EIP 1559. Everything is pretty much finalized. So this pool here is basically protesting the EIP 1559, and this makes total sense because miners do not want this at all. So so this is from Red Panda Mining, and he got they basically are all together. So Bitsby Trippin, Son of a Tech, Voscoin, a lot of these people are all together to stop EIP 1559. Although I seen a Voscoin video, and he's pretty pro EIP 1559. He's like a little bit on the fence, but he doesn't seem too against it. So I'll give him that one. But for educational purposes, let's collectively move our hash rate to ethermine.org April 1st for 51 hours. So basically, there's been a lot of videos going around from some other YouTubers that say that there's going to be a 51% attack on Ethereum on April 1st. Now, that's not necessarily true. I don't think anybody actually intends, as I've seen a lot of these videos. I've seen Bitsby Trippin, I've seen Voscoins, I've seen some of these people's videos, and nobody actually intends to do a 51% attack. The idea is that Bitsby Trippin and several other YouTubers and influencers joined the Ethereum developers meeting about mining. And they basically the Ethereum developers came up with the solution and said, hey, look, if you can move 40 to 50% of your hash rate altogether, we will reconsider EIP 1559. So another flex pool announcement. This is just from their Twitter. It leads to the same place that I just read. But they plan to move their hash rate to ethermine.org, which is I think the second largest mining pool in terms of hash rate. So what they want to do is they want to try to get 51% hash rate on ethermine.org, and then it will get the developers' attention because the developers literally said, if you can move 40 to 50% plus hash rate to one pool, meaning all of you guys organized together in a form of protest. So this is basically, if everybody can move all their hash rate together, then everybody agrees, hey, we don't want EIP 1559. While I argue you're going to end up stopping mining of Ethereum eventually anyway, and by burning fees, it's going to increase what you already own as long as you're hodling. Eventually, the mining is going to stop anyway. So it's not going to stop once EIP 1559 is out. It's just going to lower your profitability. That's all. It's not going to stop mining, but it will stop eventually when proof of work comes out. And another argument I have is if we're looking at these blocks, so you could see another block here, 2.35 transaction fees. So you can see it's literally bigger than the actual Ethereum reward. Ethereum block reward is only 2. So 2.35 is larger than the block reward. So if you remove 2.35 and then add 2, then you've literally added less. So therefore, Ethereum would be deflationary. So basically right now, if 2.35 extra ETH is going to miners, you can see here the total block reward of 4.41 when it should only be 2 and maybe just a little bit with fees as well. which has always been the case. Basically, miners are getting an absolutely egregious amount of Ethereum. So what are they going to do with this Ethereum? Well, one is obviously hodl it, but two is sell it. The profits are so high right now that it's likely a lot of Ethereum miners are actually selling. So that puts a lot of extra sell pressure on Ethereum right now, and is likely why it's not doing that amazing. Now, Ethereum is nearly $1,800. Don't get me wrong. That's a pretty good price, but it really should be 2,000 or more, as Ethereum is so useful in the cryptocurrency world. We all have to admit that almost all DeFi, all contracts, all tokens are almost exclusively Ethereum. I mean, by a huge margin. There's objectively, by a huge margin, the amount of smart contracts, tokens, DeFi, this, that, and the other thing are all on Ethereum, basically. There are very few on the other smart contract tokens. While they do have some, it's just overwhelmingly Ethereum. So that means that if you're going out and using DeFi to sell something and get your Ethereum, or you're going out to exchanges and you're buying Ethereum, maybe you're buying one Ethereum, you go out onto an exchange with $2,000 and you buy an Ethereum, well, that's putting buying pressure on Ethereum and raising the price. But because the fees are so high with mining, is that all of that is just essentially, all of your transactions are essentially going right to miners, and an egregious amount of that is going to miners, over larger, more than double, essentially twice the block reward. You're getting over 4 Ethereum when you should have only gotten 2 in some odd small fraction of fees. So that's a lot of selling pressure. Literally double the Ethereum is going out right now. I mean, people are using it and then it's just going right to miners and then being sold right on the market. Now, I'm not saying every miner just sells as soon as they get a block reward, but you have to admit that's a lot of extra sell pressure. Just imagine if Bitcoin's fees were so high that the reward was 6.25 Bitcoin, which what it is now, and imagine if that reward, the transaction fees were over 6.5 Bitcoin or 7 Bitcoin. So that means that every block, 10 Bitcoin plus, are going back to miners, or 12 plus Bitcoin, mind you, are going back to miners every single time, every 10 minutes. Well, that's a lot of Bitcoin that could be put on the markets and sold, and Bitcoin probably wouldn't do as well as it's doing now. So EIP-1559, in my opinion, is objectively good for the cryptocurrency community, not so much for miners, and that's unfortunate, but your days as an Ethereum miner are numbered. It might be a year, it might be 2 years until full proof of stake comes out and you no longer get any rewards and no longer can proof of work mine on Ethereum. But either way, they are indeed numbered. That's an objective fact that eventually it's going to stop. So, that's basically the gist of it. So if you see 51% attack, etc. on Ethereum because of this protest, it's not necessarily a 51% attack. It's not necessarily malicious. It's just a bunch of miners all getting together to voice. And the way that you protest with proof of work is move your hash rate around, and that shows where everybody is. It's essentially like protesting and gathering a bunch of people, except you're just doing it with hash rate and moving it on over. And the developers, if they do move enough hash rate, will reconsider at the very least EIP-1559. So quite the drama going on at the moment, but that's my 2 cents on that. So let's move on to some interesting news, some saucy drama here. InfoWars' Alex Jones lost laptop with $560 million worth of Bitcoin. Whoops. So basically, InfoWars founder Alex Jones has lost a laptop with 10,000 Bitcoins that were given to him by RT host Max Kaiser 10 years ago. And Max Kaiser comes to me, 10,000 Bitcoins for you. This is the future. It will be the new global currency. He's on record. I lost a laptop. He put the 10,000 Bitcoin on. Today, what's 10,000 Bitcoins worth? A lot. So after Bitcoin roared back to 56,000 earlier today, this would be a whopping $560 million. American comedian Andrew Schultz went on to physically slap Jones, who swore he had a cryptocurrency fortune. He, Kaiser, was the guy who told me that it was going to replace the dollar and that Japanese guy invented it. And again, this was 10 years ago when Satoshi Nakamoto was claiming to be a Japanese man. In a tweet, Kaiser, who is known as one of the earliest Bitcoin advocates, confirmed that he did gift 10,000 coins to Jones. Back then, they were trading at just mere dollars. Yep, the price was under $5 at that time, which is still a lot. I mean, what is that? Still 50, that's still $50,000. That's quite the gift, Max Kaiser. As reported by you today, Kaiser finally managed to convert America's most famous conspiracy theorist into a Bitcoin believer while revealing his $400,000 price prediction on Jones's show. So basically, Alex Jones lost $560 million. Big whoopsie. Moving on to some Bitcoin buyer news. Again, every single day that I make a news video on cryptocurrency, it seems, maybe we'll call it every few days at best, there is a new billionaire, a new company, a new institution buying a lot of Bitcoin. Norwegian oil billionaire says Bitcoin could be worth millions of dollars each day, puts liquid company assets into Bitcoin, similar to Tesla. Norwegian oil billionaire Inge Rake, I have no idea, has spoken in favor of Bitcoin. His company, Aker ASA, again, Norwegian stuff, which controls oil and oil service companies, announced Monday that he has established a new business to tap into the potential of the cryptocurrency. Listed on the Oslo Stock Exchange, Aker is a Norwegian holding company engaged in offshore fishing, construction, and engineering. And established in 2004, the company is controlled by Rake with 67% ownership through TRG Holding. In its announcement, Aker described CDs as a new company dedicated to investing in projects and other companies through the Bitcoin ecosystem, in which will keep all its liquid investable assets in Bitcoin. CD is starting with 500 million kroner, or which is $59 million in capital, which Rake called an amount we aim to increase significantly over time. Following the announcement, Rake expressed his view on Bitcoin and the new enterprise launch in a shareholder letter published on CD's website. The billionaire wrote, "We will use Bitcoin as our treasury asset and join the community. In Bitcoin speak, we will be hodler." We will be hodler. We will be a hodler, I suppose. So yet another person, another company investing into Bitcoin, $59 million. And he says that's just an amount that we're going to increase significantly over time. Yet another one, Israel pension giant put $100 million into Grayscale Bitcoin Trust. Unfortunately, it was just into Grayscale Bitcoin Trust, but hey, fair enough. It's a start. Israel pension company Altshuler Shaham has sunk $100 million into the Grayscale Bitcoin Trust, according to reports in the local press. Altshuler Shaham is one of the largest investment houses in Israel, with over $50 billion in assets under management. The firm made the investment into GBTC in the second half of last year, when Bitcoin was trading at around $21,000, according to the report. The revelations come at a time when institutional investors are scrambling to get exposure to cryptocurrency, either directly or at arm's length via funds like Grayscale. The Grayscale Bitcoin Trust launched in 2013. So according to its latest figures, Grayscale currently has $42.1 billion in net assets under management across all of its cryptocurrency trusts and funds. So Altshuler has an alternative assets department that has ETH and BTC wallets. They were active in the past at some degree and are looking into space again. So looking to buy even more over time here. So that's about it. We're going to go to CoinMarketCap here. $1.7 trillion market cap. We are $300 billion away from a $2 trillion market cap, which will be quite exciting indeed. But just remember, guys, so EIP-1559 is a very contentious upgrade in Ethereum. Basically, when people say it reduces fees, it's true and it's not true at the same time. It's just basically Ethereum is going to act like Bitcoin's difficulty adjustment, where it will take the current usage of Ethereum, and if it's above 50%, it's going to raise it, and if it's lower than 50%, it's going to lower it. So we'll have to see what this really does to Ethereum. Now, I think overall, it's going to lower it a little bit. It's just not going to have such extremes. It's more like a big scale of things, and it's going to try to be in the middle instead of just having this wild fluctuation up and being unable to buy anything. And like I said, when you see those Ethereum gas calculators that it says, $5 or $10 or something like that for a transaction, that's just an estimation by a third party. When the congestion really raises, when there's hype about a new token token or hype about this new platform, et cetera, it's going to raise dramatically. And the fact that some people use like MetaMask, where you can set your own gas fee for these DeFi platforms, and some people will add egregious amounts of gas so that they ensure that they get in during that block or during the next block, whereas people that just pay the regular medium or even high are not going to get into that first block. It's going to take you a little while to get into the next block, because Ethereum miners are going to, of course, select the highest gas fee so that they can get the most profit. So basically, the only people that are against this are Ethereum miners, because just look at these numbers. I mean, it's absolutely outrageous. It's more than double the actual block reward for Ethereum. This total block here was 4.41 Ethereum. This one was 4.44 Ethereum. So way larger than the actual block reward, which is starting to get absolutely outrageous. So of course, if you were an Ethereum miner, you would be against EIP-1559. But if you are an Ethereum miner out there and you're disagreeing with what I have to say, I apologize, because I totally get it. Hey, profits are great. But the amount of Ethereum going to miners right now is putting incredible sell pressure on Ethereum and sort of preventing it from going up more. But EIP-1559 will burn those fees. So it would literally burn more than the actual block reward when the congestion is really high. And Ethereum's actual supply would slowly go down. Now, it wouldn't be anything too crazy, because there are 114, nearly 115 million Ethereum. So burning 0.44 more Ethereum than is actually created by the block reward is not particularly deflationary, but it is deflationary indeed, and would put extra buying pressure on Ethereum. So I see this as a good thing. I don't really see this as a bad thing. And in any case, everybody has to realize that eventually the proof of work rewards are going to slowly get phased out as proof of stake takes its place, and eventually you're going to have to switch to something else. Anyway, it would not surprise me if Ethereum miners eventually tried to fork away from Ethereum and create their own Ethereum that they could continue mining. I don't see what good that would do, but I would not be surprised if that's the case. If somebody, as soon as proof of work comes out, tries to make an original Ethereum again, and not like Ethereum Classic, but tries to make the current Ethereum, but just start from scratch again so that you can continue mining. But a lot of people will probably end up switching their GPUs to like Ethereum Classic or Ravencoin or something like that. But eventually, it will come to an end anyway. So we might as well hold on to our, even if you're a miner, you might as well hold on to your Ethereum and let the deflationary process take place, and let Ethereum go up to $2,000 and $3,000 and $4,000, and then just cash out then, instead of cashing out your block rewards now, which I think will be better for the future anyway. But that's all I have for you guys. Make sure you subscribe, like, and share the video. That helps me out a lot. My social media in the description below. Give me a follow if you get the opportunity.